Hello and welcome to the Weekend Investing Daily Byte of 20th of June. A market which is just about stagnant and not moving, while the news of the day, or not news actually, the rumor of the day is that your FnO profits may be at risk. We'll talk about this towards the end of the video, but there is a very strong rumor that has been going around since this morning that in the union budget that is going to come, I think in the third week of July, there is likelihood that FnO transactions be classified as speculative transactions. If that happens, there are repercussions of that, and we will discuss that. But first, a look at the market. So Nifty 0.22% up, very much in this very mild trajectory upwards, waiting for some action to happen, some trigger. Not really been able to move up beyond the election day top. So uh, you know, just about hanging in there, I would say, but he's still near all-time highs. In terms of Nifty Next 50, also, yesterday it fell down a bit, but today it was totally flat. So again, up at 0.13%, listless sort of day for Nifty Next 50 as well. In terms of mid caps, you had a better performance at 0.85% up, going up gradually, uh, very near all-time highs, and from election top, still reasonable gain from there, or 3 to 4% gain from there. And small caps doing even better than mid caps in terms of actually closing at a new all-time high. You can see that consistently from election results session, there has been a remarkable run in small caps, going from nearly 14,000 to now 17,000 on the trot. Uh, Nifty Bank Index is the one which has been running the last three sessions. In fact, it is due to Nifty Bank Index that Nifty has been able to maintain the current level. Nifty Bank Index, if you remember, was flattening out at 50,000 here, and now in three sessions it has gone to 51,760, which is a great sort of sign. What FIIs and DIIs are doing. So last two sessions before yesterday, they were buying decent amounts. And yesterday's move, actually, this 7,900 crores for FIIs and 7,108 crores for DIIs, is largely the buying figure of institutional buying in Indus Tower transaction that happened yesterday. And most of the buying is due to that. But nevertheless, I mean, that is money coming in. So from that perspective, uh, bullishness from both domestic and foreign investors is there for the market. And but net of that transaction, there was not much of any gain on there. In terms of today's heat map, you can see that there is some pockets of green. So energy and minerals, uh, Reliance, Coal India, BPCL up in green. You had private banks with some follow-on buying after yesterday's move. Axis Bank, Kotak Bank, ICICI Bank, HDFC Bank moving up. Public sector banks were down. You had autos were down. You had some cement and steel stocks also go up. Power stocks were down. Some FMCG stocks were up. So a mixed bag today in terms of where we are going. DLF, Geofinance, Motherson, these are the stocks that were running today in the Nifty heat map. You had Vedanta doing almost 5%, SRF doing 3.5%, Berger Paints also doing 2.5% on the green. And then you had some losers in Godrej CP, REC, PFC, Bosch, DMart, and Torrent Pharma. Rest were all sort of mixed bag within a percent here or there. Within the sectoral trends, real estate remains the top sector of the year also, and as of for the day as well. So 2% move in real estate, 1.8% move in metals. Metals also now have done 59.3% for the year. And you also had the follow on private banking move, which in this week itself has moved 4.7%, the best performing sector in the last 1 week. You also had commodities run up 1%. Commodities have been flat for the last month or so, but for the 12-month period, a decent gain of 50.8% there as well. You had an infra, energy, and FMCG nearly flat, along with IT was flat. Public sector enterprise stocks flat. You had consumption, PSU banks, autos, and pharma losing a bit of ground here. And most of these sectors, the last ones, have lost some ground in the last 1 week. But over the year, of course, many of them have done extremely well. So it is sort of a consolidation that is happening here. Some churn is happening every day. A new sector is leading the market to some extent. Yesterday it was private banks, today it was metals and real estate. So the market remains poised very nicely. All those sectors are rotating on a day-to-day basis. So again, real estate sector, which had a sharp move down yesterday, has recovered in 1 day most of it. So that signals the strength of the market that is there in that particular sector. In metals also, the metal space is coming very, very close to an all-time high, very close to the election day top also, and it may break out going forward from here. In terms of stock spotlight, the stocks that were in chemicals and fertilizer space have run very, very hard. In fact, FACT has gone up 20% today. In fact, this has almost doubled from the election day bottom. I mean, this is the fastest doubling of any stock, I think, since then. And from 570, 80, it has gone to 1090, almost doubling within a span of just less than 2 weeks. Amazing run. And fact has been going up from, I think, 30 or 40 rupees. So 30 times it has gone up in the last few years. And when it was in the first phase of its going up, not many people would have thought this can reach this kind of level. So whenever you are looking at stocks, don't cap the upside in your mind, because stocks can do things which we can't imagine at times. So allow winners to run, allow them to have as much of a flight as they want, because you don't know where each stock can go. RCF was doing the same thing again, up 20% from 130 on election day. It is now at 222. Extremely positive moves in these fertilizer space. Gold has been flat, but gold had a small tick up today, given the fact that USD INR, the rupee has weakened again, and almost at the lowest ever at 83.6 or something, somewhere there. So gold actually is looking a bit positive. In case the dollar gold also starts to move up, then Indian rupee gold is likely to go up higher. We are at 72,150 on the gold. Coming to the topic of the day, this is hot news, hot rumor in the market that FNO profits are at risk. So how are they at risk? So if you are not aware, FNO transactions, all transactions that are done in futures or options markets, are classified as business income right now. Uh, the classification of them as business income has many benefits also. The fact that you are able to offset your FNO profits against any business loss, or your FNO losses against any other business income, is of great advantage. So if you are, let's say, a business yourself, and you are running your own conventional business, and here you are having some losses in FNO, you can always set off those FNO losses against your business income. Or if you are having FNO losses but no business income, you could carry forward those FNO losses as business loss for the next 8 years. And in some year, whenever you will have any business income, you could offset that. A few years earlier, even the STT paid against FNO was a set-offable item, but that was taken away earlier. So gradually, FNO taxation has gone up. Earlier, STT was allowed to be set off, then STT was increased, then the set-off was taken off. Now there are prospects of this new rumor that has come, that this budget may be a point where FNO transactions may be classified as speculative and not as business income. So what difference will it make? First of all, the biggest difference it will make is that speculative loss can only be set offable against a speculative profit. So if you are running a conventional business, you will not be able to set off your FNO loss versus your business income. So you will have to carry your FNO loss forward, and that is allowed only for 4 years in speculative territory. So you don't have that 8 year advantage also if it becomes a part of the speculative group. Additionally, in instances of crypto, for instance, which is also speculative in terms of classification, there the government does not even allow you to set off your crypto speculative loss with the crypto speculative gain. And if CAs who are watching this can comment if my reading of this is right or wrong, but from what I understand, this is the case. And if FNO profits and losses were to be classified similarly to crypto, then there will be a very big problem, in the sense that if FNO losses are not being allowed to be set offable against FNO profits, then that will be make a huge dent in the market volumes and the liquidity in the system. The fact that FNO could be classified as speculative is, at least in my mind, not such a outlandish thought, because at the end of the day, 80, 90, 95% of FNO transactions are actually indeed speculative, and very few are actually hedging of your cash holdings or some other strategy. But the point is that because of these tinkering of taxation rules, it may result in lowering of volumes in the FNO market. And another sort of rumor that is coming out, like this media article, is that there may be a TDS on FNO. So if there is a TDS on FNO, then every transaction or every day of transaction or every week of transaction, I don't know what will be the actual contours, but if you have to pay a TDS which you will retrieve after 1 year when you file your taxes, then a lot of FNO volumes will just vanish, because it is just not possible to trade if with each trade some part of your capital keeps getting allocated to a TDS which is set aside. So this is extremely ominous, and I'm hoping against hope that all these media reports are wrong, and there is more intelligence and semblance at the ministries to not try to tinker with the actual liquidity of the market, because FNO provides a huge liquidity for the overall markets. Even cash market transactions, which are a small percentage of the FNO transactions, there is a very good sort of reason why the cash market volumes also churn to a large extent, because there is arbitrage between the two. So if you slash one segment down, it will slash down the profits or the volumes on the other side also dramatically. And of course, if TCS, just like there's a TCS whenever you want to trade or invest overseas, if that kind of a friction element is introduced, that you have to pay 1%, 2%, 0.5%, 5% separately on each of your money going into the market or buying or of an FNO instrument, that will be extremely regressive. So one is hoping that this does not happen. But if one were to sort of uh, see where this is all coming from, why the government is even considering it. So it will be, not unfair to sort of also mention here that, last 3 4 years, so much of gloating was happening on Twitter and all these places, that by influencers, by FNO options traders. Look at this, I made 50 lakhs today, I made 1 crore today, so on and so forth. So the bureaucracy which is sitting on the other side, they are seeing, these guys are making, or at least the perception is there, that these guys are making so much money. Why should we not get our pound of flesh in terms of taxation? So this, I think, the narrative has become extremely polarized, that people are minting money in FNO, although SEBI's own report says that 89% people don't make any money in FNO. Yet more and more people are coming in, more and more retailers are coming into the market. There have been, and just look at many of these international media who have picked up on this, that how the Nifty 50 options volume has increased in the last 4 years. That was Financial Times and Bloomberg. They are showing, how what kind of growth rate are there in options traded, and contracts traded have gone to 85 billion contracts in 1 year, even if each contract is of much lesser value than the US. But just look at the volume of contracts traded, and other countries versus India, nowhere in sight also. So what has happened, in India, so have to have that kind of run? And here again, you can see that the gap between cash, equity, and derivatives, which was still under, uh, some semblance of 32 times before the pandemic, has now become, I don't know how many hundreds of time, 441 441 times bigger than the cash equity. So it seems like, the person on the other side will see that, these people are trading like a casino here, and I must regulate this like a casino or a lottery or crypto and all that. So I think this is some this sort of I would say, market men have themselves sort of put themselves into this position, unfortunately, and that's what is coming out on the other side. Another article where they're comparing US and India options volume. You can see the red bar is the India volume, the pink bar is the United States volume, and the gray bar is the rest of the world. And just look at India volumes; they're going just bonkers versus others. So this is all has been the reason why the you can say that you put yourself out in the eyes of the taxman, and nobody can really help it. I mean, uh, there was no collective effort by anybody to do this, but all this, influencing and YouTube and Instagram of how to trade options, and people, despite 89% people losing money, still every youngster wants to do options trading. Everybody who's not in the profession of trading the markets is trading the markets today. So there is a sense of frenzy. There is a sense of a from an outsider's perspective, that these guys are making easy money, and that should be taxed. So this was a very nice meme I saw on Twitter, finance meme, and I thought, at least 89% people will not be worried about this. They are not making any profits in FnO, so not much to worry for them. But jokes apart, I mean, I think this is a detrimental situation if it comes around. I hope it doesn't come around. This will be a big impact to the market liquidity and to the general sentiment of the market, I think. So, nevertheless, let's see where this will go. I think there'll be more to come in media before the budget actually comes around. Near the budget, I'm expecting a lot of volatility because of this. But let's see where this goes. Thank you so much for watching. Please like or share this video if you liked the video, and subscribe to the channel. Thanks. Bye.